Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 6th of May here in 2021. And we might not be able to see it, but the market's made, well, the Dow mini futures and the Dow Jones index made a new all-time high. Now let's start with the bigger picture, which is our daily chart. So when I show the videos and show these screens, this chart will always be the daily. And that has to do with a broader trend, which we define as higher highs, higher lows, higher highs, higher lows. And this is kind of what we call creep, bullish upside creep, but nonetheless higher high, higher low. And that is an extended, just like that, except stronger, way more impressive to the upside than it should have been, because that's similar to that. But what we're looking at is rising averages, daily averages, rising price. And if we connect off these lows and the highs, we get a clear picture of upside bull market trending environments. Now that is underscored by the most recent trading range. So this is what we have on the hourly chart. So this is what we consider a short-term type of chart, where we do maybe swing trades or short-term little plays on the intraday frame mainly, or big picture plays, but they go together. So this hourly chart shows a trading range. That is not really an uptrend, that is going sideways. And that is seen, you have to zoom in, but that's what the lower frame does. It zooms in on the bigger picture. Why are we discussing this? Because a move is setting up. And Don's mentioning this as well. And we do not know which way the move will come. A downside break sets up downside targets, and that will be anything similar to these pullbacks, and that's on the downside probability. But if we do get an upside break of this sideways trading range, and that's taken place for about 2 weeks, that could be another frustrating or profitable bullish upside squeeze. So bigger picture concepts, gamma iron condors, or just delta neutral strategies, or just keeping your powder dry for what the next move of the market makes. And we will be watching this alongside of you, trade in this alongside of you. But this is the short term, not short sell, but short term. And this is the longer duration, longer. And again, that has to do with positions that may last about a month, 2, 3, 4 months. That does include selling premium, have to go above the market, but selling premium above the market or beneath the market, and different theta collection or sell short or sell premium type of strategies. And that takes you into more neutral positions. That way you don't have to call out directions. And we're just guarding against continued upside drift. Or we can continuously play to the put side and capture a little bit of premium, which is go long premium for the put plays in the event we do get another explosion or range expansion to the downside. And as we go through May, we're starting a new month and new plays. It's the same old market, but the same strategy. We're either going to get a violent snapback, just like these, or on the other side, we could have additional bullish drift, which just happened in August, a little bit into October, and just recently never quite got that pullback. So that's the S&P. The NASDAQ is a little weaker, and it already, for those of you playing puts or playing to the downside, has given some profit to those trades. It wasn't as steep or volatile as these events earlier in the year, but it is a downside play. Put premium or long puts or any type of hedge did pay off. Notice that we did have a similar sideways trading range, but when the NASDAQ broke, it broke hard to the downside. Now that is the S&P, that's the NASDAQ. One little sneak bullishness or sneaky little bullish play. While we don't look at the Dow mini futures that much, or the Dow Jones that much, they are large cap stocks and they do move, but the way the index is constructed, it just is a little bit confusing. It's a price weight index and the others are market cap weighted. So stocks in the Dow Jones, just to get a quick look at them, include Cisco, JP Morgan, Microsoft, Apple, Nike, Honeywell, Boeing, Walmart, and the list goes on. Caterpillar, for example. Now Caterpillar, even though it was down on today's session, did make a new high. So we'll come back to that in a moment. But there's where the Dow mini futures are and the Dow Jones index, which is sneaking its way to another all-time high. Now remember, we had that similar type of trading range on the short frame or the intraday frame. This is our 30-minute or the hourly chart, so it's a similar type of range. But the Dow, remember we're looking for the S&P to break one way or the other. Well, the NASDAQ just recently broke to the downside. The Dow mini futures broke to the upside. And again, how about that S&P? Right down the middle. The other market is the Russell, and that has gone to the downside and has been relatively weak. Notice that its trading range has taken it even longer than the others. That trading range, you can barely see it on the hourly chart, but it is on the daily chart clear as can be. It's just sideways chop. At the same time, the other markets have made higher highs. So it's just a symbol of chop, or a system or a scenario of sideways action, or a box or a volatility box, rectangle, whatever you want to call it. It's consolidation. The market is building strength. They're building energy for a movement out of the consolidation. And which way will it be? That's what we're looking at and how we're positioning. Again, delta neutrality strategies or sell premium strategies don't even need to plan for that direction. It's get a premium collection strategy on and then hedge in case there is a large-scale breakout outside of the range. If the range continues, even better for the positions. Now, these are the strong stocks getting stronger. So for those of you who might not be direction neutral, you do want to put some directional risk on. This would be to the upside. This is bullish upside risk or bullish upside opportunities. And these have to do with strong stocks getting stronger. And this is a list that I show as many times as I can in the evening videos. And these are just scanned. Again, we discussed this in the last video. It's simply loading a scan query, and we're going to go public. And for me, it is new yearly highs. So load scan query, public new yearly highs. And we're going to do that within the S&P 500. Now, there are 500 stocks, of course, roughly, in the S&P 500. And of those, via the scan, 125 just made a new 52-week high. And we don't have the way the parameters set up, but in some, if not many of the cases, these stocks are making new all-time highs. And these are strong stocks getting stronger. And the logic is they will continue to get stronger, and they are outperforming the market. And they are therefore likely to continue outperforming the market. And we want to buy them on pullbacks, retracements, or add premium, add call spreads, or add trades as the markets or the stocks pull back. Now, we're going to sort this. You can do this on your own time in your own charts or on scan list because there are 125 names. And if you just want to look at the video, I'll scroll slowly. Of course, you can pause the video and take a look at the names as they scroll down. But these are a list of stocks in the S&P 500 sorted by market cap that are making new 52-week highs. And all the way to the bottom of the scan down to rider systems. Now, I want to concentrate trades or trade strategies or setups on the highest market cap. I don't necessarily want to spend a lot of time looking at these stocks because there might not be enough volume, might not be enough liquidity, or might not be ability to trade these stocks. Potentially they are, the options, if we're trading options, might have wide bid-ask spreads, and that might not be good for many traders. So we will focus on these with larger market caps and larger volume or average daily volume for potential opportunities. Berkshire Hathaway is a financial stock, and before we start talking about that, financial stocks did make new highs today, or at least the XLF, which is the financial sector, did join or exceed the market, right? The S&P did not quite make a new all-time high. The Dow did, but not quite the S&P. We don't want to split it hairs, but nevertheless, that is a pullback. That is a retracement. And these opportunities back to the 20-day moving average or some other type of pullback, those are what we are looking for to get long call options. Again, if you want to add directional upside risk to your swing portfolio or in general. Other stocks would include, just quickly, United Healthcare, and I am going down the list of the top few by market cap. We can't get long the high. That is not a good trading strategy, even though it's a strong stock. What generally happens after a stock makes a significant run, is that it does pull back. We call that a retracement or a pullback, maybe a rubber band snapback. And that is a good spot to put on risk or put on trades. And similar examples would be those pullbacks, but we cannot do that at the all-time high. These just become stocks to put on a watch list or to wait for that pullback. Or if you're very aggressive, that would be a short sell opportunity. But notice how Home Depot continued to rally without any meaningful pullback. Sometimes that happens. Bank of America, we see Wells Fargo, and T-Mobile's on their Morgan Stanley, and then Philip Morris, Caterpillar, Raytheon, American Express, and we'll do a couple more. Goldman Sachs and Target. Now, again, these stocks are getting stronger, and we can have the same discussion, and we have had the same discussion at each of these new prints. Remember, each of these days, all through here, and then all through here, this particular stock or others did make new 52-week highs. And the strategy, again, is to expect that trend to continue, at least in the short term. We're not talking 6 months from now. We're talking about the next month or the next swing of the market to get those trades on if you need to put some long bull or upside potential risk into your trading plan. If not, then the put side of the market is going to be plenty of opportunities there because multiple stocks are overbought, overextended, and due for the pullback. So either way you look at the portfolio or how you play your trades or strategize your short-term opportunities, going back to the big picture, we are sideways and chopping on the short term on the S&P. We have broken that range to the upside on the Dow, broken the range to the downside in the Russell and the NASDAQ, and that just leads the S&P to split the difference and continue sideways. Be careful. Be patient. We will not always see sideways action. After sideways action does typically come a breakout. And as traders, we do not know which way that is going to happen. Be careful and be safe. This is Corey Rosenblum with tonight's Theo video update for May the 6th, 2021.